Audio and video both are okay. Are we good to go? Good morning to all of you. How are you all? All good? Okay, so let's start the session. And this is our orientation class regarding the principles and practices of banking. So, in today's class, I will be discussing certain important concepts related to the PPB. Hana? So, I am not starting with the first chapter, that is your banker customer relationship. The first chapter of your PPB is banker customer relationship. Okay, do remember that. So, first of all, there are four modules. Hana? How many modules are there in the PPB subject? There are four modules. Okay, and the four modules have a certain your units. In the first module, if I talk about, in the first module we have a first chapter, that is banker customer relationship. We will be starting that from the Monday. This is a orientation class, the basic understanding of the subject we are going to have with the important topics of your subject, okay, in this class, in this today's class. So this is your orientation class of PPB, Principles and Practice of the Banking. Before starting the session, I want to tell you all that the PPB syllabus has been little bit changed in comparison to old syllabus. There used to be 5 modules, but now there are 4 modules: A, B, C, and D. The module A and B are very lengthy. They covers all the rules, regulations, norms related to your KYC, AML, CFT. Apart from that, related to your account, types of accounts, HANA types of deposits, the various types of customers who can open the account. So each and every a single rules and norms has been given by the IIBF in your module A and B. So a little bit more time you have to give to the module A and B in comparison to your C and D module. Okay, so that's what we are talking about in the principles and practice of banking. But yes, the module A and B will be very important. Most important module will be your module B, in which maximum number of questions can be asked. Okay, so okay, let's start the session. I have given you the basic overview of the subject. This is the overview, and do make sure you are focusing on each and everything that I am saying, and have the conceptual understanding, because the case study questions are there, and without that we will not be able, Hana, we will not be able to cover your subject, because there is a conceptual clarity must, or the it is a power, we can say, to clear this exam. Okay, so let's start the session here with the basic understanding of the subject. So first of all, financial institutions. What are financial institutions? Simply, in a particular economy, when we are in the economy, when whether we are talking about Indian economy or any economy, we have a financial system. We have what? We have a financial system. What is financial system? Financial system is simply a system in which we are trying to exchange the funds. Hana, we are trying to exchange the funds among the people who have surplus money. One second. Among the persons who have surplus money and the person who have deficit of money. Okay, the persons who have surplus money and the persons who have deficit of money. So we are doing what? We are exchanging that. So the exchange of funds among the persons who have surplus money and the persons who have deficit of money, that exchange of funds is known as your financial system. This is the work of your financial system. Hana? And in the exchange of funds, we need a mediators. Hana, it is obviously that the individual persons are not going to give each other money, and they are not going to go for a for asking for the individual person for the money they required. So we need a mediators who are able to take the money for the from the persons who have surplus money and give that money to the persons who have deficit of money. So that's why the mediators are required, and those mediators are your financial institutions. Those mediators are your financial institution. It can be your banking institution, it can be banking institutions, or it can be your non-banking institutions. Non-banking financial institutions. Okay, so they became the mediator. Acha, do let me know. Banking institutions we all know, like the commercial bank, RRB, cooperative bank, your non-commercial banks, etc. will be there in the banking institution. What does non-banking financial institution means? What does non-banking financial institution means? Pooja ma'am, that is starting from 1st of April. Bilingual PPB batches is starting from 1st of April. Okay. Mutual fund, stock market. Non-banking financial institutions we have, like your all India financial institutions, right? Like the primary dealers, like the non-banking financial companies, NBFCs. These are the non-banking financial institutions. Okay, so they will be known as your non-banking financial institutions. The banking institutions are the institutions who are registered under the Banking Regulation Act 1949, and they follow the rules regulations that has been created by RBI. Non-banking financial institutions are those institutions which are registered under the Companies Act, है ना, or a certain act, but they have to follow the rules of RBI also, है ना. Like the NBFCs, non-banking financial companies are there, so they will be established under the Companies Act 2013, है ना. The NBFCs are established under the Companies Act 2013, but they have to follow the RBI regulations, है ना, because each and every non-banking financial institution, if they want to work in India, they have to follow the norms of RBI. Clear? So this is what the financial institution, and this is what the financial system is actually means. Clear? Now you can see the definition here. So financial institutions are the entities that help individuals, Hana, that help individuals and business fulfill their monetary and financial requirement, either by depositing money or investing it or managing it, है ना. So those financial institutions which helps the individual person or the businesses to fulfill their money need by depositing the money, by investing that money, or by managing that money. Okay, and some of the financial institutions labeled under this category includes your banks, your investment firms, your trust, brokerage ventures, insurance company, etc. All these are the financial institutions because all these become the mediator here. Clear? Next. The financial institutions are divided into two categories. First is banking institution, second is non-banking financial institution. Now, what is banking institution and how it is working? First of all, in the banking institution, we have a proper types of banks that are working in India, but all the banks comes under the central bank of our country. So the banking institution first covers your central bank. It covers your central bank. And who is the central bank in India? That is RBI. The Central Monetary Authority in India is RBI. The central bank is RBI. Okay. So here RBI has divided the banks into two categories. And now what RBI has done, RBI has divided the banks into two categories. That we have schedule bank and non-schedule bank. Schedule bank and non-schedule bank is there. Okay. And then the schedule bank has been divided into three categories. These schedule banks have been divided into further three categories, and that were commercial banks, non-commercial banks, and the cooperative bank. Cooperative banks. Now, the non-scheduled commercial banks, the non-scheduled banks only have one type of bank, that is local area banks. So there are only one type of bank under the non-scheduled category of banks, that is your local area bank. Okay, now next. So now the commercial bank further divided into three category, that we have public sector bank, then we have private sector bank, and we have foreign bank. These are the three category under the commercial bank. Under the cooperative banks also we have three category. Like the first category is primary credit society. The second category is district central cooperative banks. The third category is state cooperative bank. Okay. PCS stands for Primary Credit Society. DCCB stands for District Central Cooperative Bank. SCB stands for State Cooperative Bank. Now, under the public sector bank, we have further two categories. Under the public sector bank, we have two categories. First is SBI, State Bank of India, and second is Nationalized Bank. Second is Nationalized Bank. Okay, now see. Apart from these categories of bank, we have the other categories also. That is the special category banks, you can call it. So we have other type of commercial bank, that is RRBs, regional rural banks. Second, we have small finance banks. And third, we have payment banks. Okay, RRBs, small finance bank, and payment bank. These are the other types of commercial banks in India. Hana, they have been created for a special purpose. And that special purpose we are going to discuss further. Clear? Let me know. Is it clear till now? Answer quickly. Is it clear? Now, what are these banks? Let's have an explanation of these bank also. First, we have your schedule bank. So schedule banks are those banks which are listed under the second schedule of RBI Act 1934. So all the banks which RBI has listed in the second schedule of RBI Act 1934, these banks are known as your schedule bank. Hana, what are non-schedule bank? Non-schedule banks are the banks which are not defined under the second schedule of RBI Act 1934. Okay, now the scheduled bank have a three category commercial bank. They have a motive of profit earning, and they are providing all kinds of services to the customer, with the motive of profit. Second, non-commercial banks are the banks which do not work for the profit, but they do work for the development of a particular sector, like the NABARD, SIDBIs there. And cooperative banks, they are working for the mainly agriculture sector. They develop the agriculture sector. Now, the public sector banks are the banks in which the 51% shares or more than shares remains with the government. It means the ownership of the bank will remain with the government. That's a public sector bank. In the private sector bank, the ownership of the bank will remain with the individual person with the private ownership. The foreign banks are those banks whose branches in India, but their headquarter is in the foreign country. Okay. SBI, we know it is the largest public sector bank of our country. Nationalized banks are those banks which used to be the private bank, but the government of India has purchased the 51% shares and more than 51% shares of a bank. That bank will be known as nationalized bank. Like the banks which used to be the private, but the shares has been purchased by government. Now they became the nationalized bank. Okay. Primary credit societies are the banks which are working at the village level. So they work for the agriculture sector. They provide a short-term loan for the agriculture sector up to 50,000 loan, but in the villages. District central cooperative banks, as the name suggests, these are the banks which are working on the which are working at the district level. So they are providing agricultural loan to the district level persons. State cooperative banks do not deal with the consumers, they do not deal with the customers. They are known as Apex Bank in the cooperative societies, and they provide loan to the primary credit society and the district central cooperative banks. Okay. So every state have a one bank that is a state cooperative bank that is also known as a Apex Bank that stays in the headquarter, so that it stays in the capital of the state. Okay. Now, local area banks are those banks which do not have a paid up capital of rupees 5 lakh, and they do not maintain CRR and SLR. So the non-scheduled banks are the banks which do not covered under the second schedule of RBI Act 1934, Hana, and the local area banks are the non-scheduled banks. So they don't have a paid up capital more than 5 lakh, or not more than 5 lakh. They do not have a minimum paid up capital of 5 lakh, and also they are not maintaining the CRR SLR reserves. Clear? Now, RRBs. RRBs are known as regional rural banks. RRBs are what? Regional rural banks. So these banks was created to uplift the rural economy. है ना? RRBs was created to uplift the rural economy. That is the regional rural bank of our country. Next, we have a small finance bank. The small finance bank and payment bank was introduced for the financial inclusion. Now, what is financial inclusion? Financial inclusion simply means that we can call it a process in which we are trying to link each and every person with the financial product and services at an affordable cost. For this purpose, we have introduced the payment bank and a small finance bank. So, payment bank and a small finance banks was introduced for the financial inclusion purpose. Okay. So these are the conditions of the banks, or these are the explanation of the banks. Now, let me know immediately that all the types of banks are clear in your mind. All the banks are clear in your mind. Now, why I am discussing, I have already said, like, now one person is saying, ma'am, this is out of the syllabus. This is not out of the syllabus. It doesn't mean it is not written in a unit, particularly like banking institution, you have to study. No, this is the foundation class. This is the orientation class of your paper. है ना? In which, acha, if you are going to study the PSL, na, sir, in the priority sector lending, the RBI has given the target of the PSL on the basis of the categories of bank. If you don't know what is the basics of the banking system, how you will be able to understand the priority sector lending target? And it's not possible that in every chapter you are starting with the basics, you are starting with the zero. You should know the basics of the subject, and that's what we are discussing today, the basic of the subject. Okay. So don't go with this such a concept that this is not other part of the syllabus. This is the basic of a syllabus. Clear to all? Okay, done. Now, next. Non-banking financial institutions are the financial institution that does not have, Hana, they do not have a full banking license. They cannot accept demand deposits. They can accept deposit, but not mainly the demand deposit. Term deposit can be accepted here. Okay. So, however, non-banking financial institutions do facilitate alternative financial services such as the investment, risk pooling, financial consultancy, brokering, money transaction, and check cashing. Okay. So NBFIs are a source of consumer credit along with the licensed bank. So we know that around 60% of requirement of funds in India is fulfilled by our commercial banks. है ना? It is fulfilled by our commercial banks. 60% requirement is fulfilled by our commercial banks. But still, there are certain requirements of funding that not have been fulfilled by the banks. That was not fulfilled by the banks. To fulfill that kind of requirements, we have introduced what? We have introduced your non-banking financial institution. So examples of non-banking financial institution includes your venture capitalists, your currency exchanges, some micro loan organization, microfinance institution. All these are the part of your non-banking financial institutions. Now, so it is divided into three category: All India financial institution, non-banking financial companies, and primary dealers. These are the non-banking financial institutions. Okay. Now, first we have a Exim Bank. Exim Bank was created to provide loan, credit, finance to the exporters and the importers. They promote the cross-border trade and investment. Exim Bank is what? The export-import bank. So it's promote the foreign trade in the country. Okay. Next we have a NABARD. So NABARD is simply what? National Bank for Agriculture and Rural Development. And now what is NABARD? NABARD is National Bank for Agriculture and Rural Development. It was established in 1982 and 100% ownership of NABARD remains with Government of India now. And it regulates the cooperative banks and RRBs in our country. Okay. It provides funding for the development of the agriculture and the rural areas. That is the NABARD. Then we have a NHB, National Housing Bank. National Housing Bank used to be the wholly owned subsidiary of RBI. Hana, what is subsidiary means? Subsidiary means simply your helping company or helping party. So RBI had the NHB as a helping party or helping company, but RBI sold the NHB 100% share to the government of India. Now NHB is a development bank of government. Okay. And it works for the development of the housing sector in our country. Now SIDBI is there. A Small Industries Development Bank of India. It is managing the small industries in our country. Okay. It provides funding for the small industries in the country. That is SIDBI. Next. So these were the all India financial institution. Now we have a non-banking financial companies. So non-banking financial companies, first of all, they have to be registered under the Companies Act. Apart from that, they have to follow the RBI Act 1934. They have to register under the RBI Act 1934. Okay. These are the companies which are engaged in the business of loans and advances. So they provide loans and advances where in the acquisition of shares, bonds, debentures, securities, chit funds, hire purchase, etc. But they does not include any institution whose principal business is related to agriculture or industrial or purchase or sale of any goods or providing any services or sale purchase construction of immovable property. So these institutions will not be covered. Hana, these institutions will not be covered under your NBFC. They will not provide loan to these institutions. Hana, so NBFCs mainly provide loan to the Hana, the NBFCs will be providing the loan to the investments of any kind, but it will not cover the agriculture, industrial, purchase or sale of any goods or services, or sale, purchase, and construction of immovable property. In these cases, NBFC cannot provide loan. Clear? Sure, Shamira ma'am. Let me know till now everything is clear to you, Shamira ma'am. Will be a little bit slow now. Acha, do let me know everyone that till now everything is clear. If you have any doubt, let me know in the comment section. Okay, clear to all now. Chalo, let's continue. So a NBFC, which is a company and has a principal business of receiving deposit under any scheme or arrangement in one lump sum or in installment by the way of contribution on or in any other manner is also NBFC. So first of all, RBI now has allowed the NBFCs that you can accept the deposit, but they cannot accept the demand deposit. They will accept the term deposit. What is term deposit? The RAFA, recurring account and fixed account. So NBFCs are allowed to accept deposit now, and they will be only accepting the term deposit, not the demand deposit, but the term deposit. Hana, and the companies, the NBFCs who accepts the term deposit, they known as statutory NBFCs, or you can call them R NBFCs. Okay, so these are the NBFCs which has been allowed by RBI that you can accept the deposit. Okay, and if they are accepting deposit, that's very much basic requirement that you have to follow each and every rule of RBI because you are dealing with the public money, Hana, and it's the responsibility of RBI to secure the public money. So that's why you have to take or you have to follow all the rules and regulations of RBI. Okay. Now there are very basic thing which we should know what is the difference between banks and NBFC. The first thing is first that the banks are registered under the Banking Regulation Act 1949. The NBFCs have to register under the Companies Act 2013. Banks can accept demand and term deposit. Bank can accept what? Bank can accept the demand and term deposit both. NBFCs can only accept a term deposit. They can accept only term deposit. They are not allowed to accept the demand deposit. Okay, they cannot open the current account, savings account. Now, the banks are allowed to participate in payment settlement system. NBFCs cannot participate in payment settlement system. Cannot participate in payment settlement system. Achha, let me know what is the payment settlement system means. Like banks can participate in the payment settlement system, but the NBFC don't. So what is payment settlement system? Okay, done. Very good. So when you talk about the payment settlement system, it means the way which you are providing the bank customers to transfer their funds, Hana, or to deal with their funds, like the check, demand draft, NEFT, RTGS, IMPS. All these are the part of your payment settlement system, Hana. So bank can perform the transactions in the NEFT, RTGS. They can provide check clearance. They can provide demand draft. The UPI transactions, everything will be allowed by the bank, but not by the NBFC. So NBFC cannot provide these services. Okay. Apart from that, if we talk about banks, Hana, if we talk about banks, what's there? In case of banks, they have to maintain reserve ratio. Now, what is reserve ratio? Simple CRR and SLR. So banks have to maintain the CRR and SLR, but the NBFC do not have to maintain. है ना? Not required. Not required to maintain the CRR and SLR. Okay. Apart from that, banks can have the insurance. Banks can have the insurance under DICGC. Acha, what is DICGC? It is stand for Deposit Insurance and Credit Guarantee Corporation. Now let me know how much insurance claim will be available in the DICGC. Now NBFCs cannot register. NBFCs cannot will not covered under DICGC. Okay, the deposit of NBFC cannot be covered. Very good. It is 5 lakh. No, no, no. It's not 1 lakh. It used to be the 1 lakh, but in February 2020, RBI has updated that amount. Now it is 5 lakh. Hana, 5 lakh per customer it will be. So this is the basic difference between the bank and NBFC. Now what is DICC? DICGC stands for Deposit Insurance and Credit Guarantee Corporation. This is a subsidiary of RBI. This is what? This is a subsidiary of RBI, DICGC. And Hana, if I talk about the DICC subsidiary, it do what? It provides the insurance to the banks on the public deposit. Hana, it provides what? It provides insurance to the banks to the public deposit, that is known as your DICGC. Okay. Now, next third one is primary dealers. So primary dealers got license from RBI only in the year 1995. So RBI allowed the primary dealers in the 1995 year to deal in the government security. है ना? So primary dealers are registered entities with the RBI who have license to purchase and sell the government securities. So RBI, as we know, RBI is the central bank of our country, and RBI has working as the agent of government of India. So the selling purchasing of government securities will be done by RBI. है ना? So that is known as primary dealers. Primary dealers are allowed by RBI that you can participate in the selling purchasing of government security. So they are the entity who buys government security directly from RBI and then they resell them to the other buyers. है ना? RBI instruct the primary dealers that what to do, what not to do, and how they have to function in the country. So they are active in the stock market also. Primary dealers can sell the securities of government in the share market also, like the Bombay Stock Exchange and National Stock Exchange. है ना? So they can perform the government security trading there. The government security means what? Your treasury bills, your dated government securities, है ना? It can be your Kisan Vikas Patra, it can be National Savings Certificate, है ना? So any kind of security that has been issued by government can be sold or purchased by the primary dealers. Now, there is a condition who can become the primary dealer. So any entity who wants to be registered as a primary dealer, they have to be one of them. First, the subsidiary of scheduled commercial bank. Subsidiary means the helping party. The subsidiary of scheduled commercial banks and all India financial institution will be eligible to become primary dealer. Second, the subsidiaries and joint ventures set up in India by entities incorporated abroad. It means any foreign financial institution who has established a subsidiary in India or has established a joint venture in India, they can also become the primary dealers. Now, company incorporated under the Companies Act, they are also allowed to be a primary dealer. Okay. And these are the three cases in which the primary dealers will be selected. And if you want to become a primary dealer, so at the time you are giving application to become the primary dealer to the RBI, you should be registered as NBFC for at least 1 year. It means Whoever is going to give the application to the RBI to become the primary dealer, the 1 year experience should be there as a NBFC. Hana, 1 year prior to the submission of your application, you have to be registered as a NBFC. Then only RBI will allow you to become the primary dealer. Otherwise, no. Okay. Next, remittances. Now, what does remittance means? Remittance means transfer of funds. Hana, remittance means what? The transfer of funds. So when we are transferring fund from one place to another, that is known as remittance. Okay. Acha, let me know, in India, the remittances are only allowed as a domestic remittance, or the international remittances are also allowed? Do we only allow the domestic remittances, or the internationals are also allowed? Both are allowed, right? The domestic and international, both remittances will be allowed here. Very good. Next. So, remittances are an important source of family and national income, and are also one of the largest source of external financing. So, beneficiary in India can receive cross-border inward remittance through the banking and postal channels. है ना? So, banks have general permission to enter into a partnership with the other banks for conducting the remittance business. Now, there are keywords. There are certain parties, like sender is there. It means the remitter who is sending money. Second, beneficiary is there. Hana, who is accepting the money. Hana. Inward remittance, it means money coming to India, and outward remittance, it is money coming outside the India. Hana. Now let's understand the conditions of the remittance. So remittances will be your domestic, Hana, and international. One second. So we have options here. We have a domestic remittance, and we have a international remittance. And just we have discussed, there are two types of remittances, that is inward remittance and outward remittance. We have a inward remittance, and the second one is we have outward remittance. Now, what these remittances are means, let's understand that first. So the first thing here is, in the domestic remittance, the inward means you are transferring the funds in the same bank. And the outward remittance means you are transferring the fund in the another bank, or the other bank. That's the inward and outward means in the domestic remittance. In the international remittance means, inward means money is coming from abroad to India. Money has been transferred from abroad to India. That will be known as your what? Internal. Hana, money is coming to India, that's internal. Outward remittance means money is going from India to abroad, or it means money has been transferred from India to abroad. That will be known as your outward remittance. Okay, it will be your outward remittance. Let me know, is it clear? All the types of remittances are clear? Let me know. Okay, done. Next. Next, we have a types of accounts. So many types of accounts are there which can be opened in a bank. The detail of the account we will be discussing in the particular chapter, but now what how many types of accounts are there, let's understand. So the first category we have a basic accounts. Bank has a basic accounts. Basic accounts covers your simple the CASA and RAFA. Hana, these are the basic account, CASA and RAFA. Current account, savings account, recurring account, and fixed account. Second, we have a particular account which has been introduced for the financial inclusion. Accounts introduced for the financial inclusion. What is financial inclusion? I have explained you simply the process to link each and every person with the financial product and services at an affordable cost. That is financial inclusion. है ना? So we have a no frills account and we have a BSBD account, basic saving bank deposit account. We have a Jandhan Yojana account. So these are the kind of account which has been introduced under the financial inclusion. Third, we have a trading account. Third, we have types of trading account. So we have a demat account. Hana, that's a dematerialized account. We have your gilt account in which government securities will be traded, and we have a escrow account also. Escrow account is your third party account. Hana, escrow account is your third party account. Now, apart from that, we have an account for NRIs, non-resident Indians, or you can call it person of Indian origin or the overseas citizen of India. So for them, we have a NRE account, non-resident external account. We have NRO account, non-resident ordinary account. We have foreign currency non-resident account, that is FCNR account. So these accounts can be opened. Apart from that, we also have a foreign currency account. We also have foreign currency account in which we have EEFC account, exchange earner foreign currency account. Right, we have your Nostro account. We have Vostro account. They don't have a full form. Nostro, Vostro, Loro, these three are the Italian word. They don't have a full form. Nostro, Vostro, and Loro account. So these are the foreign currency accounts. Okay. Now we also have accounts as per transactions they have been divided. Hana, as per transaction conditions. So we have a inactive account and we have a dormant account. So these are the total types of accounts that can be open in a bank. Hana, these are what? These are the total types of account that can be explained in a bank. Clear? Let me know. Now, what are these in detail we will be studying, but in the different chapters. In the details of the chapter, we will be discussing all the types of accounts. Let me know for which purpose what account can be opened. This is clear. No, no, they are not same. They are different. The duration is different here. In inactive, it will be 12 months. In dormant, it will be 24 months. Okay, next. So these were the types of account we have discussed. Now, the non-performing asset. What is non-performing asset? It is very simple. We know what are banks. Banks accept deposit. Okay, deposits are accepted by banks. And the banks provide the loan of these deposit and to the public. So this loan is the asset of a bank. And this deposit is the liability of a bank. Okay, the bank's asset is loan and bank's liability is a deposit. So there are two types of deposit. First is demand deposit. Second is term, or you can call it a time deposit. So there are certain account in the demand deposit that works on the demand. Like whenever you want to deposit money, whenever you want to purchase withdraw money, you can do that. That is a CASA, current account savings account. That's the demand deposit. Term deposits are the deposit which has been fixed for a particular term, like the RAFA, recurring account and fixed account. These are the term deposits. Okay. Now, the assets are also of two types. I will be explaining in the next slide. There are two types of assets: standard and standard asset and non-performing asset. But first of all, what is NPA? So, bank has provided loan to earn a certain amount of interest, है ना? But when the asset of a bank stop generating the income for a bank, it's known as non-performing asset. The asset of a bank which is not performing in the market is known as non-performing asset. Very simple, right? So why bank is providing loan? Just to get interest, just to earn income. But when the asset of a bank stop generating the income for the bank, that will be known as non-performing asset. Okay, so NPA is simply a kind of credit facility provided by banks to the your customers, Hana, on which the customers are not providing the principal and interest amount for a particular period of time. In that situation, it will be known as your non-performing assets. Hana. So when bank is not able to generate income, that will be known as non-performing asset. Okay, done. Now there are two types of assets. We have a standard asset and non-performing asset. So do remember the non-performing asset, if we talk about the non-performing asset, do not include the standard assets. The standard assets are the assets which are not went till the or which are not stop generating income for the bank. So the standard asset has been divided into two categories: regular asset and stressed asset. Regular assets are the assets in which banks are regularly getting their installments. But the stressed assets are the assets which started giving stress to the bank, like the SMA 0, SMA 1, SMA 2. Started giving stress means now the customer stop paying the installment. Hana, when from 1 to 30 days installments is not aware, installment has not been paid by customer, that is SMA 0. From 31 to 60 days, if the customer haven't paid the second installment, that will be your SMA 1. From 61 to 90 days, if the customer haven't paid you the installment, that is the SMA 2. And after this SMA 2, we went to the NPA. So it means after 90 days, the asset of a bank becomes the non-performing asset. After how many days? 90 days. So what is SMA? SMA stand for your special mention account. It is a special mention account. So these are the account which helps in the early identification of bad debts. Okay. A special mention accounts are the accounts which helps in the early identification of bad debts. Clear? And in the NPA, there are three categories: substandard asset, doubtful asset, and loss asset. So NPA have a three types of assets: substandard, doubtful, and loss. Okay. These are the classification of SMA 1 to 30, 31 to 60, 61 to 90. And after this 90 days, the asset will declared as a NPA. Clear? So let me know all the basics which we have discussed today is clear to each and everyone. Do you have any doubt in today's session? So that's the basic. Now, our next class is going to be there on Monday, in which we are going to discuss the banker customer relationship. That's the first unit of your first module. Maybe that loan has been restructured, maybe in case 4 to 5 years are there and that has not been defined as a NPA. First of all, maybe the installment is coming. If the installment is coming, then it will not be known as a NPA. When the customer stop paying the installment, है ना, that is known as your NPA. है ना, when the asset of a bank is stop generating the income, that is NPA. So, Venkit Rao sir, maybe you are getting the installment on the loan, that why it's not NPA. And if no such kind of condition is there in your bank, maybe the loan has been restructured. That's why it is not defined as an NPA. So time of the class will be your 6 to 8 a.m. No, no, there is no negative marking in this particular May June exam. There is no negative marking. Done. So this is the information for all of you who are watching us on the YouTube, that the selection batch has been started from today. That's the selection batch English medium, in which I have taken the first class of the PPB today, as you can see. So if you want to enroll, you can enroll by using a code Y496, and 81% discount will be available for all of you. And if you want to go with the Maha Pack, in the Maha Pack, you will be getting the double validity plus 81% discount. Okay, and these offers are available for today only, because this is the end of the month sale, so that is going on right now on the application. Okay, now how to enroll in the batches? To enroll in the batches, you have to download the 24/7 application. If you haven't done it, do it, because 1% additional discount will be available, and the link to download will be available on your description box. Now, how to enroll? Just go to the application and then go to the JIB section and CIB section. You will find on the application. If you want to go with the selection batch, click on the JIB 2023. If you want to go with the Mahapack, click on the Mahapack. So you will find here, these are the batches, the test series, the video courses, ebooks, everything is available here. If you want to go with the selection batch of all the 4 subjects, click on this particular batch. If you want to go with the only PPB selection batch, you can go with here. Okay, now how to enroll? Just click on the particular batch. Do read the details, the dates and timings, or in the study plan, everything is available on the website. Do check that. Click on the buy now option, enter a code here, that is Y496, and click on the apply. So you will find 80% discount here, but 1% additional discount will be available if you purchase from the application, where 1% additional discount will be available. So around 3600 something you have to pay here. Okay. Apart from that, the much better option for all of you will be Mahapack. So Mahapack, we have 2 types of Mahapack, JIB and CIB. So JIB Mahapack will be of one year, and the JIB CIB Mahapack will be of 2 years. So after enrolling in the Mahapack, you will be getting all target batches, all selection batches, all ebooks, all test series, upcoming revision batches, case study batches, everything will be available. How to enroll? Just click on the Mahapack, do read all the details. After reading all the details, same process has to be followed. Click on the buy now option, enter a code Y496, click on the apply, and you will find here 80% discount. For 1% additional discount, you have to go to the application. So after paying around 60 to 100, you will get the 1 year validity and everything for the requirement of the JIB. Similarly, if you go with the JIB and CIB ka Mahapack na, so you will be getting everything to qualify the JIB and CIB, and you do not have to invest anywhere else until you clear the CIB exam. Okay. So this is the information for all of you. Now let's meet again on Monday with the first class of PPB subject, that is banker customer relationship. Till then, take care. And on Sundays, we will be having, or not on Sundays, every day we will be having a YouTube session. So if you want, you can check the playlist there. The YouTube sessions are available. And the special sessions on Sunday will be available. So do make sure you subscribe the channel. Offices are at 24/7, so that you will get all the information about the classes. Okay. So let's end here. Take care all, and see you all on Monday. Okay. Take care. Have a good weekend. Take care. Bye bye.